Good morning, everybody, and welcome to Beat the Bell, presented by Kane Capital. The first episode of 2023 is about to get underway. I hope that everybody is as excited as we are for what is sure to be an insane year of trading to come. If it was anything like the year 2022, hopefully Beat the Bell and Kane Capital will help you guys to navigate the markets this year. Without further ado, let's introduce our panel this morning, starting with Coach Dipka. Coach, good morning.
Morning, everybody. Hope everyone had a happy new year, happy holidays. Alejandro, that is an incredible outfit as well.
I appreciate it. This is my new robe gifted to me during Christmas. It is UGG. It is very comfortable, and I do wear it now more than anything else. Ramsey Rippers, good morning.
Morning, man. Dude, it's crazy. We haven't done an episode in a year since last year. It's good to be back.
This guy.
It's good to be back.
All right. Money Mander.
Good morning. I'm on Dipka's sentiment, man. I'm pretty jealous of that thing as I get all dressed up here to play the part. That thing's looking pretty comfortable.
Yeah, you made the mistake early on. For those that don't know, Mander, the first episode, he showed up in the suit. Everybody absolutely loved it. And then it kind of became mandatory. For me, on the other hand, I was like, no shot. I put it on once. I remember the first episode, I wore a suit, and I was like, never again am I doing that. But, yeah, it definitely adds the value to the show. You look very professional. Noah, good morning.
Good morning, guys. Hope everybody had a great New Year's. I kind of agree with Alejandro. I'm love-hate with the suit, man. You look great, but it's like the effort to put it on in the morning. Can't do it. Couldn't be me.
Someone's got to spice this up.
All right, Snipes.
Good morning. I don't want to wear this anymore, to be honest now.
All right. So, guys, before we get started today, I do want to mention that all of the charts that you'll be seeing on today's show are TrendSpider charts. So if you like what you see, if you're interested in joining TrendSpider, we have a 25% off affiliate link for you guys that you can find in the notes in the description of the YouTube channel. So be sure to hit that link, again, if you're interested in TrendSpider. But let's get things underway, starting with our Fed forecast and economic outlook. This is a big one. The first one of 2023. This is going to set the tone. Careful with what you say, boys. What do you got for us?
Yeah, I'm excited. First Fed forecast of 23. Let's get it. We're going to start off with the economic calendar for this week. So let's pull that up. This week is obviously going to be a shortened week with New Year's on Monday. We had global manufacturing PMI come out yesterday, and it actually came in a little bit lighter than expected. The number was, I believe, 46. Let me just verify that. Yeah, 46 versus 47 expected. So PMI actually came in slightly light yesterday. And the market actually did pull back on that a little bit initially before rebounding into the end of the day. Today, however, is going to be significantly more important. We have ISM manufacturing PMI at 10 o'clock and the JOLTS job openings number at 10 o'clock. It's going to be extremely important. Following that, we're going to have the FOMC minutes release from their December meeting, which I want to touch on for just a little bit longer. If you guys remember last year, this was sort of the day that sparked the sell-off, right? The day before the December Fed release for 2021. So that came out on January 5th of 2022. The day before January 5th, 2022, so January 4th, 2022, was the all-time high in the S&P 500. And then the minutes release came out from the December 2021 meeting, and everyone absolutely freaked out. We sold off for like 3 weeks straight, and that ultimately like marked the top forever, the absolute top. So it's going to be interesting. I don't obviously expect quite as much volatility from today's release, but we're going to have to pay attention and see exactly how the market wants to react. Again, this is just going to be a recap of their December meeting, and so in their December meeting, if you guys remember, Powell sort of reiterated that they're going to have their rates higher for longer, right? Talking about the terminal rate. They also raised their unemployment projections for 2023 and lowered their GDP projections for 2023. Those projections that they had made earlier in 2022. So it'll be important to look for any sort of deviation from what Powell was saying at the press conference in December versus what the minutes are going to say today. And then also anything that they say on the time frame of that rate elevation and the terminal rate is going to be extremely important. So back to the economic calendar, just to wrap things up, we have ISM manufacturing PMI on Thursday, as well as balance of trade on Thursday, and then a big non-farm payrolls number on Friday tends to induce quite a bit of volatility in the market. So no shortage of market moving data coming out this week. Should be exciting.
FOMC is a big one I'm watching today because I still just personally feel like the markets didn't fully digest what we had in the last meeting, with 17 of the 19 participants saying they saw us ending 2023 over 500 basis points at the terminal rate. We're trading pretty much right where we were trading before that. So I don't know. We'll see what their narrative is, and what better way to start 2023 than to look at the street's projections for where big firms see us ending the calendar year. So I went over this. I have some statistics I want to give, and then I want to get Diamond's take on this. So the average of these 24 firms here and their projections for the end of the year actually came out dead at 4,000 SPX by the end of the year. So here are the numbers I have for us, right? I wanted to go back and do some due diligence on where they're getting this from. They think we're going to close the year green, obviously, right? No recession has gone on before. To have a down year like we just had, then have a green year before continuing lower. And so basically what they're calling is either the bottom's already in October lows, or we're going to set a new low under the October lows, but then go on to rally and finish the year green up like 600 points from that point. If we were to close at 4,000 after setting new lows, the biggest 600-point rally into the end of the year. The dot-com bubble that we saw in 2000 to 2002 took 2 years and 7 months to set the bottom. And then the 08, financial crisis took a year and 5 months, but then that one was obviously bailed out by the Bernanke put and setting the rates at zero, quantitative easing, all the new monetary policy that they implemented there in 2008 to kind of dig us out of that hole. That one likely would have gone on way longer than a year and 5 months. And so as we move into this next calendar year, Diamond, I want to get your take on where you think they're pulling these 4,000 projections. Some were even in the mid 4,000s, meaning like we're going to see a significantly green year this year.
I think I saw 5,000, right, as the highest.
Yeah, one firm came out with 5,000. We're going to go into all-time highs the year later.
32% rally in the S&P this year. Okay. Yeah, I think what they're doing is they're betting on sort of a Fed reversal, right? Because if that's your mindset, if your mindset is the market bottoms after the Fed pivots, I can understand why you would expect a sharp rally, right? Like even if you're projecting a bottom in like Q2, Q3, and the Fed does come out and pivot like aggressively, I wouldn't be surprised to see like a 15% rally over like a short, like a couple months. Like it's definitely possible. So I mean, I think when you look at how this year is going to go, that's basically what you're guessing, right? Is the Fed going to pivot? And if so, when are they going to pivot? How much time does that give the markets to rally into the end of the year, right? That's basically what these people are betting on. And I think the earlier that happens, the more bullish it is for the market, right? So the sooner the Fed pivots, the sooner that people can sort of start to look beyond this and look towards rates decreasing again, and financial conditions not being quite as tight. So I think that's probably what they're betting on, and I think those are definitely aggressive bets. But I guess we'll have to see. I
think those bets that they're placing go exactly with what I was just saying, that not a single person listened to this December meeting and processed nothing that was said, because they see us ending next year higher, let alone a pivot. They see more hikes into the end of next year. So I just don't know where they're coming from. And before everyone says, doomsday Mander and Mr. Bear here, Ryan, pull up last year's projections for me if you could. And so this will just show you where the street is not always so great. The mean forecast at the start of last year was 4,900 for the end of 2022. They came in over 1,000 points off. We closed just over 3,800. And then even at the end of quarter two there, they were projecting about 4,500 on average by the end of the year, still off by like 700 points at the close there. So, this is just my personal opinion, but clearly Wall Street is really clueless in this too, right?
Yeah, it's a tough guessing game, right? And so I think you have to always take those types of projections with a grain of salt, obviously, because even to give them like a little bit of credit, like who knew that there would be an invasion right in the middle of last year? Like it's pretty crazy how much can change in 12 months. So just keep that in mind when you see these wild outlandish projections like 5,000 by 2024.
Yeah, throwing darts at the dartboard, really. But that'll wrap up our Fed forecast, the very first one of 2023, and we'll send it back to you, Alejandro.
Beautiful. Thank you, gentlemen. All right, guys, let's talk about the system. So before I get to the system, I want to take a look here at the daily chart. The range that we have been trading in, this sort of 100-point range here, if you feel like the market hasn't really done anything for about a month now, it's because it really hasn't, okay? The market, again, has been trading in a very tight range, especially over the past 11 trading days or so. And so what does that mean when we're trading the system? Obviously, the system is a momentum built trading strategy, right? We rely on momentum in the market. So when there's very little momentum in the market, as we've seen recently, things get a little bit trickier. So let's go down, of course, to the 30-minute chart. And if you're new and you're not familiar with the system, it's simply the 10 SMA and the 50 SMA and the 30-minute SPX chart. But what we have been seeing is buy signals all over the place, sell signals all over the place, buy signal, sell signal, buy signal, sell signal. So in order to trade this market, and regardless of what strategy you've really been trading with, what we're learning is until we break out of this range, again, that 100-point range that I just kind of outlined on the daily chart, it's been a take profits quickly, take what you can get type market. But I will say that using the system still provided a ton of winning trades. Breaks below the 50 SMA worked for 20-point sell-offs. Breaks above worked for 20-point rips. It just hasn't been that really nice, beautiful 100 to 200-point trend that we like to look for. So I'm keeping that in mind in my trading this week. I'm sized down knowing that the home runs are kind of unlikely until we get some sort of break, until the market starts to show us that it wants to finally do something. And so risk management during a time period like this, during a stretch like this, is very, very important versus getting frustrated that the market isn't doing anything and then unreasonable and taking large losses when it's difficult to even stack up large wins. But let's talk about what we can look for headed into today. So the market is trading higher here in the pre-market. Futures up about. So we should, if we can hold on here for the next 40 minutes, open above 50 SMA on the 30-minute SPX chart, which of course would be bullish by the system's definition. But again, going back to that thought process of, well, the market hasn't proven on these pops that it's ready to break out, and then it's ready to, let's say, make a run towards 4,000, okay? So for me, it's trading small, proceeding with caution, being happy with whatever gains I can get at this point, okay? But let's say that the market doesn't hold on. We open below the 50 SMA or we get a break below the 50 SMA. That, of course, is bearish, guys. So it's pretty simple to see because of where we closed right at the 50 SMA on the 30-minute chart. And before we move on, we'll take a look at the hourly chart. Of course, sitting in the same spot at the 50 SMA. So the two charts are kind of telling a similar story, which adds that conviction that if we are to trade above the 50 SMA on the hourly chart, you have both time frames, the 30-minute and the 1-hour SPX charts telling the same story, which would be bullish, vice versa if we are trading under it. So nothing too exciting as far as the system as of late, guys. Nothing sexy. We tend to get these trades where we sit in the same trade for 3-4 days, and we see 100 to 150 point drop in the market. We see a 150 point rally in the market. And we're just sitting there laughing our asses off because we got in right at the 50 SMA and the trend was just beautiful. We haven't gotten that as of late. So it's important to manage risk, to not do anything stupid, but be ready for when that opportunity comes in order to really capitalize. All right, guys. So that's what I've got today as far as concerned. Now I'm going to pass it over to Ramsey for Bet the Bell. What do you got for us, Ramsey?
Wow. All right, let's do it. First, Bet the Bell of 2023. Everyone knows what the first question is. Let's get right into it. Indices slightly green, SPY up about 0.5%. Invesco, QQQ, just about the same, a little bit higher than SPY respectively. So green or red today? Let's start it off with Diamond Trades.
I will go green. I really think it's a coin flip. I mean, we have so much news today between jolts and minutes release, but I'll go green.
Yes. Also, FOMC minutes today. That is, I forgot to state that. Thank you very much, Diamond. Alejandro.
I'm going to go green today. We're going to open above that 50 SMA, so I'm going to be bullish bias.
Hey, open above the 50 SMA. The system tells you what to do. Money Mander, what do we got?
I'm taking red. Evidently the Powell pump is still on again whenever he puts his face on the camera on national television. But I'm thinking today with the minutes release, maybe people actually read what was coming out of his mouth instead of just looking at him. And they finally digest what was said in the last meeting. So I'm going to take red.
Interesting. Dipka.
Yeah, I'm going to go with green here. We are up significantly pre-market, and I don't know, this 380. Just we keep getting over it every time we come under. So I'm going to go with green today.
Last but not least, Stock Sniper.
I'm going to have to go with green. I think we've been really struggling to get under 380, and I think we will probably see a positive reaction today from the Fed.
The lone wolf.
Amanda hates to say that.
Yeah, honestly, I was going to go green as well. I mean, it's a coin flip. We'll see. We'll see what happens with the minutes. This is going to lead us into our second question of the day. So we're going to stick with the S&P 500. Our October lows, 34.91, is the baseline of this question. So by March 31st, 2023, the end of Q1 of this year, do you guys think we take out that October low, that 34.90 low? Will the SPX take out October low by the end of the first quarter of this year? Diamond Trades, please indulge.
Wow. I'm going to go yes. I'm going to go yes on this one. I think that earnings season is going to smack a lot of people in the face, and I think that'll do it. That'll be the nail in the coffin.
Yeah, I mean, honestly, I like it. It's plenty of time to lose 330 points. I mean, it's really not that far away. Over 3 months to go. Alejandro, you came up with this question, so I think you're pretty excited to talk about it.
Yeah, I'm gonna say no, and the reason is I can't see. Diamond mentioned earnings season, which that's very fair, honestly. But I can't think of a strong enough catalyst for that large of a decline, because I'm anticipating that the market is really going to take well, although it's already known, to the Fed pausing in the next couple months. So I don't know. Something for us to get down there again. I think that something really has to go wrong. That's my opinion. Something really has to go wrong.
What if they don't pause?
So with you saying that, I'm going to skip Snipe and Dipka for now, and I want to go to Money Mander. Money Mander, what could go wrong?
Exactly what Diamond just said could go wrong. So we're going to get into these year-over-year inflation numbers where we're backdating and comparing to last year's high inflation. So the year-over-year is likely going to start coming in negative as we get into February, March, April. But if the month-over-month doesn't start going down, that's really showing that inflation's not actually coming down. It's getting compared to higher numbers where the Fed's not going to pause. So that coupled with, I'm expecting really, really bad earnings coming this upcoming quarter. So I'm in Diamond's boat here. I think we take it out. It's like 9% down from where we're trading.
Right. Just about 330 points. Stock Sniper, talk to me.
Yeah, I mean, logistically, I think we're just close enough for that to happen. It looks very feasible for that to happen to me.
So yes. So we got a yes for the
That's
Snipes.
a yeah.
And last but not least, Coach.
Yeah, I'm gonna guess that it's taken out, and I say that. I sprinkled a little bit of Apple in my first buys in my long-term account.
Man.
So it's tough
Oh
to
my God,
say.
Mander's
but
gonna have a conniption.
I know. I'm gonna guess that it's likely we probably would. I'd say so. Yeah.
I honestly agree. I just think that there's so much time. I'm looking at the chart right now. As Mander said, it really is only 8.5%, 9%. We got a good 3 months to go. So, all right, we'll see. We'll come back to this at the end of quarter one, and who knows? Maybe Hondo will be the lone wolf that is right on this one and give us a ton of shit. So this is going to lead us into our last question of the day, Bet the Bell, first segment of 2023. We're going to do things a little bit different here. Rather than myself asking a question where we're either going to have a yes or no answer, I'm going to ask the guys what their bold prediction of 2023 is. What's your hot take for 2023? Let's start with Diamond.
I was really hoping you would go to somebody else. I'm going to – all right, my bold prediction is that Tesla, which had – what were they, like down 12% yesterday or something?
Yeah.
They're going to end the year green.
Yeah. I could see it.
That's the prediction. End the year green.
You heard it. You heard it here first. Diamond Trades, Tesla is ending the year green. Dwayne Trade.
I've got the boldest prediction.
Mm-hmm.
I don't even have to listen to the other ones. I know for a fact that I'll have the boldest. I'm saying that Cathie Wood will outperform the S&P 500 in the year 2023. How about that one?
Dude, listen.
You wanted bold, you got it.
I love it. Cathie Wood's my girl, man. Chief investment officer.
That's the hottest take you'll hear all year.
Hottest take, hottest trader. I agree, man. Look, man, Cathie Wood, that's my girl right there. People can shit on her. 12 years as the chief investment officer at AllianceBernstein. What else? Managed $800 million at Tupelo Capital Management. She's the girl. She's the woman. She knows what she's doing. Put your trust in Cathie Wood. It's funny. Mander and I had this talk yesterday on a debate. Who are you taking to manage your money, Cathie Wood or Jim Cramer? You guys know who I took. Mander took Cramer. We got a video coming out soon.
That was tough. They're both horrible. And as much as I don't like Cathie and her resume doesn't impress me, I actually can see that bold bet coming true because a lot of the names she's holding got absolutely slaughtered. Like, how much more pain could be in all these names that are down 90%?
Exactly.
Well, if Tesla ends the year green, Hondo has a good chance of getting his bet right. Yeah. So I like it.
There's more upside potential than downside risk. It's not the craziest thing in the world to say.
No, not at all.
Honestly.
Especially at this.
No, not in those names for sure.
I mean, didn't she just?
Yeah.
I mean, I think she bought 170,000 shares of Tesla just yesterday. So
she's nuts, dude. She's
listen,
on one.
Brother, if Tesla ends the year
Cathie just
green,
pulls the trigger whenever, dude.
Dude, if Tesla ends the year green, that is
she'd only be down like 30%.
Snipe. What's your hot take of the year? Bold bet. Give it to me.
I think someone's going to steal a decent amount of all of the Bitcoins. I think someone's going to steal at least like 20% of all of the Bitcoins out there. And someone's just going to off with this huge bag.
I don't doubt it, man. I cannot doubt that. Dipka.
Yeah, I'm gonna go with the S&P. This isn't like crazy bull, but the S&P. I feel like a lot of people are very pessimistic coming into this year. I'm gonna guess and go out on a limb here, saying S&P closes green for the year.
That's a very bold bet. Nobody, especially because on Fintwit, I mean, like if you say anything even relatively positive about the market long term right now, like everybody's like, "Fuck this guy." Like you can't say a single thing positive, and like nobody will take you seriously. So saying that, it's definitely bold.
Yeah, Money Manders over there,
Coach.
like freaking out.
Yeah, all right. I actually have my 2023 market outlook coming out today after Diamond proofreads it for me. So give that a read, and then and then let me know, because it's going to be very contrarian opinions. But after hearing your last thing that you longed Apple, I almost don't want to say my bold bet. But I thought about all the bold bets I would have this year, and my bold bet is that Apple is going to retest the pre-COVID highs around like $80.
Ooh.
Where it ends the year, I don't know. I think it goes down and retests $80. So that'll be my bold bet, and we'll have to circle back to that.
Let's do it. We got these. These are all clipped, recorded. You cannot escape the recording. So what you guys said is forged in stone in history forever, and we will come back in about a year from now or when they hit. So that's going to do it for Bet the Bell today. Alejandro, take it over.
All right, guys, we are now going to do a member spotlight. For those of you that are unaware, we like to highlight a member in the Discord who has just been doing things right. Not necessarily on a profitability basis, not necessarily on a skill as a trader basis, but somebody who's just really knocking it out of the park, putting in the effort and showing that they're doing whatever it takes to become the trader that they envision themselves being. And this morning's member spotlight is going to be Tom Kazansky. Run it, Ryan. Tom, well done. Everybody clap it up for Tom. So for those of you that are unaware, and we put this on Twitter yesterday, so I'm hoping that a few of you saw the message that he wrote to us in the Discord. So Tom's story is honestly incredible. He early last year, lost $40,000 over the course of 4 months. He had taken our boot camp, and he finally decided to just sit out and listen to the Discord for a month. And in his message, he said he didn't take any trades. He simply listened, and he started to form his own strategy. And he took the time to write us, a really long message, basically thanking Kane Cap for the trader that he has now become. Last month, he made $65,000, which is just absolutely insane. It's incredible to see somebody turn things around like that. I know that a lot of people are likely in that stage of their trading career where it's easier to lose money than it is to make money, and you may feel as though there's no light at the end of the tunnel. Tom's story is a story of persistence that is just absolutely awesome. So again, Tom, wanted to highlight you on Member Spotlight because seeing something like that, seeing you turn things around is very inspirational. Not only for everybody in the community, but for me, honestly. I love seeing stuff like that, man. So thank you for taking the time to write that message, and we're looking forward to you having an awesome 2023, which he already started off yesterday by making like $4,500. So he's absolutely killing it. Way to go, Tom. All right, guys, we're going to start to wrap up the show now with today's top watches. So we're going to go around and ask the head traders what it is that they are taking a look at headed into today. And to start, we've got Diamond Trades.
Yeah. So this is actually that chart that Alejandro showed before about this range that we've been in on SPY. If you're like a day trader and you sort of are magnified on smaller time frames, you may not have noticed when you zoom out that we really haven't done much over the past couple of weeks. I really do think that this consolidation is leading up for a range break, and when it does, it's going to be glorious in one of these directions. So that's really what I'm waiting for, right? I think that's going to be the first big trade of 2023, and we're going to try and capitalize on it.
All right, Money Mander, what do you got?
All right, for once, it is not Apple or NVIDIA. I got something totally new for us here starting the year. I'm watching XOM and this bear flag to the downside. As I was talking about last year, I thought XOM was one of those names that outperformed pretty much everything last year. And so I didn't see people selling this before the end of the year, because then you'd have to claim your capital gains taxes for this April. And the very first day of the trading session in 2023, minus 3% down day, people finally taking some profits because they're delayed into next April now for your capital gains. The thing outperformed crude oil futures by 75% last year. It really just made absolutely no sense where this thing kept rallying from. So I'm watching this one for downside and a rollover if it breaks out of this bear flag.
Beauty there. Snipes, what do you got?
I got 4 levels for you guys. I got 4 levels for you guys. Up at the top, we got 383.29. I might be looking to take a rejection off of this level. Down under us, we got 382.09. Right there, we do have a pretty nice level. I've seen both pivotal points, bounces, and rejections off of this level. Under here, we got 381.15. This level could be a pain in the ass to break it to go under, so this is a pretty nice support level. And last but certainly not least, I have 380.66, which is a level we've been seeing hard bounces and hard rejections off of for the last week and a half.
Awesome. And last but not least, Ramsey.
Yeah, so I do not have a top watch today, but I forgot to give my bold prediction of 2023, which is going to be, I'm going with, for the second year in a row, back-to-back years, my bold prediction is that Dwayne Trade will break a phone this year. He did it in 2022. He's going to do it in 2023. Self-inflicting harm to phone due to a day of bad trade.
Brother, listen, that's by no means a bold prediction. I take that bet 10 out of 10 times.
He's going to break the phone in 2023.
Over under 10 mice broken. Computer
10
mice broken.
I love it.
All right, guys. That's going to do it for this morning's episode of Beat the Bell. Hope you guys enjoyed it. First episode of 2023. That's a wrap. Again, if you guys like the charts that you saw, they were all TrendSpider charts. We have the link to our affiliate discount code, which is at 25% off that you can find in the description of the YouTube video. Ryan just threw it up on the screen there as well. But again, thank you guys for tuning in, and we'll see you in the Discord. For those that are unaware, the 6 of us plus Mo Mamba trade live all day, every day in the Kane Capital Discord. You can go to kane-capital.com to trade with us. Good luck today, everybody. Manage risk, trade smart, and we'll see you back here on Friday morning at 8:30 a.m. Eastern Time. Have a good one, everybody.